The word alone triggers fear. Falling stocks, job losses, uncertainty. But here's the truth. Recessions create more millionaires than bull markets. The key is not to panic, but to prepare. In this video, I'll show you the smartest investment strategies for surviving and thriving during a recession in 2025. Let's turn fear into opportunity. Whether you're a beginner or seasoned investor, recessions test everyone. Markets crash, businesses struggle, but smart investors know this is when real wealth is built. If you understand where to put your money, how to stay calm, and what to avoid, you can come out stronger than ever. So let's dive into the top 7 recession-proof investment strategies for 2025 and how you can protect and grow your money even in uncertain times. Dividend-paying stocks are your best friend in a downturn. Companies like Johnson & Johnson, Coca-Cola, and Procter & Gamble have a long history of paying out dividends, even during tough times. You get paid while you wait for the market to recover, and these companies tend to be more stable in a recession. In a recession, people still need food, medicine, and household essentials. That's why sectors like consumer staples and healthcare are more resilient. Stocks like Walmart, Nestlé, Pfizer, and Unilever tend to perform better when the economy slows down, because demand doesn't disappear. Cash is not just for emergencies, it's for opportunity. In a recession, prices drop, and the people with cash on hand can buy quality assets at a discount. Keep at least 3 to 6 months of expenses in liquid savings, so you can survive and strike when the time is right. Trying to time the market is a losing game, especially in a volatile economy. Instead, use dollar-cost averaging, DCA. Invest a fixed amount regularly, no matter what the market is doing. Over time, this strategy reduces risk and smooths out your investment performance. It works especially well in choppy markets like 2025. When stocks are shaky, government bonds and T-bills offer safety. In 2025, with interest rates still relatively high, short-term bonds and high-yield savings are giving solid returns with low risk. Diversifying your portfolio with fixed-income assets helps protect your downside. In a recession, job security is never guaranteed, but skills are. Use this time to upgrade your education, take online courses, learn new tools, or start a side hustle. The best investment during uncertain times is in your own earning power. It pays the highest guaranteed returns. Recessions often cool down the real estate market. If prices drop or interest rates shift, buying property at a discount becomes possible. Look for cash-flowing rental properties or REITs, real estate investment trusts, if you're not ready to own physical property. Don't panic sell your investments. That locks in your losses. Don't chase get-rich-quick schemes. Scams rise during fear. Don't stop investing altogether. This is when assets go on sale. Recessions test your mindset more than your money. Stay calm, stay consistent. Recessions are temporary, but smart decisions during them can change your financial life permanently. Comment below. What's your personal strategy for handling a downturn? And if you found this helpful, don't forget to like, subscribe, and hit that notification bell.